Well, as we wrap up the year, many people are already taking stock of their investments and mapping out ways to maximize returns in 2025. Portfolio diversification is one way to balance your investment risk and increase your reward. And here to discuss more tips for diversifying your portfolio in the coming year is Peter Sashecki from Everything Financial, joining us virtually this morning. Good morning, Peter. Good to see you.
Good morning. There was a bit of a traffic jam this morning, so this is what we had to do.
Yeah, well, this works. We still get to hear your advice this morning. And before we jump into the portfolio diversification, of course, the Bank of Canada lowered its interest rate yet again this morning, Peter. This is the fifth consecutive cut this year. How much of a good thing is this for Canadians as we head into the holiday season?
Couldn't come at a better time, could it, Carrie? Another 50 basis points. Prime lending for your home equity line of credits, which are based on prime or prime plus a half. But if you're fortunate at prime, you're down to 5.45, and there's more to come in the new year. They got to get those rates back in line with inflation. Their estimates from economists are still about a point above where they need to be, but let's take the good news, take it as a win, and say your monthly costs are going down a bit, and that's a good thing, and it couldn't come better. It's Christmas time.
Yeah, a lot of people needed to hear that. And you have been receiving some feedback on a recent topic that you had here on the show, portfolio diversification. So first of all, a quick refresher, how does portfolio diversification work?
Well, there's different risk levels. How much of your portfolio is in equities, which is theoretically higher risk, or more volatility, and how much of it is bonds. So the kind of normal middle of the road is a 60-40, 65-35, or 70-30 diversification, with the bigger number being the equities, the smaller number being fixed income, which will have a bond component in it for sure.
So is there such thing as being diversified? Yes, they over-diversified.
I know.
How do people know?
Absolutely care. Yeah, it's a tough one. There is such thing as being over-diversified. You could have a 60-40 portfolio or a 65-35 portfolio, but if it holds way too many companies, it's not so much of what the percentage is, what's the quality of the company. So we had an independent company because of this do an analysis of 4 different independent portfolio managers. They weren't one of the companies, so they had no vested interest in this. And they found a case in a lot of cases where a 60-40 company, because of over diversification, the portfolio was more risky or more volatile, if you will, than a company with a 70-30 and a 65-35 portfolio because of the quality of the investment. So it's not just the number of investments, it's the quality of the investments that help to decide a portfolio.
Okay, so is there a rule of thumb when thinking about investment diversification to maximize returns on your money?
Great question, Carrie. If you want to be the lay person who doesn't know anything about this, and that's who we're trying to teach, and we talked about this before, look at the 5 to 10 year numbers in a portfolio and look at what the volatility is. So you could have, and in this example, the 70-30 and the 65-35 portfolio, 5 to 10 years had really only about a 1% swing in the rate of return. So it was always really consistent. And that shows good quality of investment. So that's what you look for. The 60-40 portfolio had a 3, 4, 5% swing in investments. So it may have been well diversified and had 300 or 400 companies, but a lot of the companies are less than quality, let's just say. I don't want to say a bad word on TV, but they weren't quality companies. There was a lot of speculative companies. And the more the number changes, the more the volatility. So you like consistency, and a consistent number. Doesn't really matter then if it's 60-40, 70-30, whatever the case may be. Go for consistency and low volatility to have a better target on your rate of return.
Interesting. Okay, Peter Sashecki with Everything Financial providing some information on portfolio diversification. Thanks for that, Peter. Thanks for joining. I'm glad we got you. I'm glad you made it on TV.
Oh, it was tight, but next week I'll just leave Monday to get there for Wednesday.
Yeah, traffic can be that bad sometimes. Thanks, Peter. Enjoy the rest of your day.
All right. Thanks, Carrie. You too. Take care.